The SEC had a final deadline of May 23rd to make a decision on VanEck's spot Ether ETF application. That day, the SEC approved a rule change which would pave the way for spot Ether ETFs. What was your reaction to that? I saw you put out a statement that said that the milestone anticipates more legal victories and increased investments in Bitcoin, Ethereum, and other blockchains. What else did this development signify?
It was the biggest regulatory 180 in recent SEC history. It confirmed that Ethereum is a commodity, which we think is tremendously bullish for the prospect of innovation happening on open source blockchains. So it's great news. Bitcoin and Ethereum are both up more than 60% this year. The NASDAQ is up 12%. So it's another year of top performing numbers from this asset class. And when we look at the state of the blockchain, you all talk about the quarterly earnings reports coming from corporate America. On the blockchain, we can see the P&L daily. And 2024 can be characterized by all-time highs across the board, whether it's number of addresses that are interacting on the blockchain, the number of transactions, the amount of fees that users are paying. It's all record highs. So quite positive.
What does this mean for VanEck specifically, this development?
We were the first traditional ETF issuer to file for a Bitcoin ETF in 2017. We were also first to file for a spot Ethereum ETF. So there was a world in which being first used to mean something. You can argue that respecting the queue, as it were, is foundational to property rights. So I still hope and expect that the VanEck Ethereum ETF, if it's approved, will trade first. If not, then it'll be all issuers at the same time, and we'll see what happens.
Were you surprised by the SEC's decision to approve a rule change, or did you see it coming? I mean, many industry insiders I spoke with ahead of the decision said that they didn't think it was going to happen right now, especially given the lack of engagement by the regulator with applicants. That is until the week of the deadline for VanEck's spot Ether ETF. So did you have any correspondence with the SEC? And if so, did that correspondence take place before the week of the deadline, or did it happen the week of the deadline? What happened there, if you're able to discuss?
I was on the record as saying that I would eat my HODL hat if an Ethereum ETF trades before the US election. Very surprising. I'm working up smoothie plans right now to hopefully execute on that promise. But no, it was very surprising. I think it's a reflection of the public pressure that's been brought. The crypto super PAC is now the largest industry-specific PAC. It's larger than Donald Trump's reelection campaign PAC. So that
you're talking about Fair Shake.
Yes. So that got lawmakers' attention. And it hasn't really gotten the White House's attention yet, right? So the White House put out an executive order 2 years ago instructing all federal agencies to bring maximum pressure on this asset class. And that's been playing out for 2 years. We hope this is the beginning of a turn.
And we're going to talk more about regulation in just a bit. But just to break it all down, the SEC approved VanEck's 19B4 filing, along with 7 others, including BlackRock's and Fidelity's. But the SEC has yet to greenlight the ETF's S1s, which would allow for the trading of these ETFs. So what's next? What does this mean for VanEck? How long do you think that will take? And just in a nutshell, what are the next steps?
So as you observed, to list one of these ETFs, it's like a nuclear code. You need 2 keys, the 19B4 and the S1. So we'll have to wait and respond to the agency's comments if there are any. And we're hopeful that these products can be trading in a matter of weeks, but it's really not up to us.
You're confident that the SEC will in fact approve these S1s?
Absolutely. There's no fundamental logical difference why Ether, the asset, should be treated differently than Bitcoin. And this will be the final confirmation that ETH is a commodity And I think what we really look forward to, there's so many traditional financial market participants who are not fully aware that this is not an asset purely for speculative means, but it has real world use cases, 3,000 different apps that have collectively transmitted more than $3 trillion in value over the last year. So this is an open source app store with the potential to take significant margin away from the big tech platforms and also banking. And we look forward to educating the traditional market participants about this asset.
Do you have a new price target for ETH given all these developments in the mix?
So we did just refresh our model, and based on more constructive view around the political landscape, as well as some of these on-chain indicators where Ethereum's scaling roadmap has really ignited a boom in users transacting on the network. So we see this network generating more than $70 billion in free cash flow to token holders by 2030, and that will support a coin price of 22,000 per Ethereum by 2030. So we're at 3,800 or so now. It's a 47% odd CAGR.
And it certainly will be very interesting to see if that forecast does in fact come to fruition. But of course, this development with spot Ether ETFs comes about 5 months after spot Bitcoin ETF started trading here in the US. You're wearing the hat, HODL, that is VanEck's spot Bitcoin ETF. At last check, as of June 4th, there were more than $705 million in total net assets. Compare that to, say, BlackRock, which has more than $20 billion in net assets. It's important to note that BlackRock did in fact become the largest spot Bitcoin ETF in the US, even surpassing Grayscale. So how does your spot Bitcoin ETF compare to your competitors? What differentiates yours from the others out there?
Well, given that the SEC allowed all these products to trade on the same day, that of course gives an advantage to the largest incumbents. So there was a world in which speed used to matter and the first to file would be first to list. Maybe someday we will return to that world now that these crypto asset ETFs are normalized. So there are few ways for issuers to differentiate themselves given the starting point was the same. We did it through skin in the game. We made the largest investment off of our firm's balance sheet into our own product by a multiple of $3, $70 million. So if this asset has a big correction, we're going to be there with skin in the game to explain why, do the research, and be there next to our clients. The second is the quality of our research. If you look at our models on these assets, I think they're the most detailed on the street. And the third is that tickers can be differentiators. So we think we have the best one with HODL.
How do you think the approval of spot Bitcoin ETFs here in the US changed the landscape and changed crypto sentiment? What exactly has changed in the past 5 months since January when these spot Bitcoin ETFs started trading here in the US?
The spot ETFs have opened up an entirely new class of buyers, and those are people who manage other people's money. So the number one rule of managing other people's money is that you can't lose it. Like physically, you can't misplace it. And because crypto is a bearer asset that settles instantaneously, the exchanges historically didn't have separation between the trading platforms and the custody platforms. And that's what made it so risky to hold Bitcoin on the exchange. So with these ETFs, now traditional managers can buy it, put it in their brokerage account, and be sure that the custody element, there's a separation of powers. And so what we've seen is that a whole new class of buyers have come in. One thing that really surprised me from the 13F filings is that registered investment advisors own the same amount of these Bitcoin ETFs as do hedge funds. And investment advisors manage 10 times the assets that hedge funds manage. So when the ETFs were listed, the more nimble money, specifically macro and multi-asset hedge funds, allocated aggressively. Maybe there'll be higher velocity traders of this asset. And the investment advisors came in at a more measured pace. the investment advisors are likely to be the stickier, larger holders over time. I think when you see next quarter's 13Fs, the investment advisor to hedge fund ratio will be 2 to 3x. The ETFs have also opened up to pension funds. We saw the state of Wisconsin make an allocation. Even a Bitcoin miner, Marathon, reported in their quarterly results that they bought the ETF for whatever reason. So it's just a very handy vehicle. So we're seeing that market share gain continue.
Now, turning back to regulation, the House in recent weeks passed the Fit for the 21st Century Act, which is a crypto market structure bill, with 71 Democrats joining 208 Republicans in voting yes for the legislation. What was your reaction to that development? And are you noticing a political shift as it pertains to crypto right now?
There is definitely a political shift. The amount of money that crypto has energized from regular donators, as well as some of the larger companies in the space. But the crypto super PAC Fair Shake is now the largest industry-specific PAC by a multiple of 2. The second largest is APAC. The Fair Shake is now larger than Donald Trump's re-election PAC. So you can be sure he's observed that and wants a piece of it. And I do think that we need to differentiate between what's happened on the Hill, where the House, voted, I think, more in a symbolic move for Fit 21. I think the Senate is going to be slower to approve that. A lot of the banking committee members want to get their hands on it and amend it. And frankly, there are a lot of things about the bill that could use working on. But I think
you posted that on X. Yes.
It lays the groundwork for a much more favorable environment next year. Hopefully there's a new administration, gets to work on, comprehensive legislation, and Fit 21 can be a kind of the backbone for that.
Now, turning to another popular technology, AI, Bitcoin miners have been pouring millions into AI businesses. Just this week, Core Scientific announced a deal with CoreWeave. That deal is expected to add more than $3.5 billion in revenue over a 12-year time frame. That's the time frame of the contract. And you offered some perspective on X, writing that Core has earned an average of $550 million in revenue over the past 3 years. So what do you think about that development, the fact that Bitcoin miners are pouring millions into AI businesses, and the fact that they're retrofitting their current businesses to service AI clients, especially as Bitcoin mining revenue tanks?
So we think that crypto and AI share a number of foundational elements. One of them, as you observe, is the energy intensity. So both require vast amounts of energy, and because Bitcoin miners have been operating in that environment for so many years, they often have already plenty of electricity, which could be repurposed into AI applications. Now, it's not completely seamless, but there are overlaps. Some of the other elements that AI and crypto share are transparency. So you can see all of the transactions on the blockchain. That's very important for AI. Immutability, so that you know where the data has been and where it's been going. Proof of ownership, extremely crucial. What crypto enables, because it's really a coordination mechanism, crypto, between compute, people, and money. And it incentivizes the good things and disincentivizes the bad things. And it establishes provenance for every asset. You can see on the blockchain where every piece of data has gone, where every token has gone. And we think that's going to be very powerful in establishing credibility for open source AI. That AI cannot realize its full potential unless it is transparent and unless the models have been trained in this adversarial environment that crypto really creates. So there's a reason why, crypto is known for hacking, is because these are open source software. So people are constantly probing it for vulnerabilities and trying to extract value. And if we're going to give critical function to AI and let it make material decisions, not just composing lyrics, then we're going to need to have confidence that it's training on the right data. And if we use crypto economics and open source databases to train and incentivize the right types of models, we think that's going to be compelling competition for the closed source models, notably Google.